What's up, you guys? I'm super excited to bring to you this video. So I'm making this video purposely for those who were unable to join yesterday's class and for those who joined and still did not understand. So make sure you take advantage of this video to understand everything. Please make sure you go back and watch the video from support and resistance, the recorded class of the support and resistance. I'll make a video properly on it. But in the meantime, make sure you watch that video because support and resistance is one of the most important concepts in the forex market. You need to know about this, so make sure you watch it. And I went in depth. I explained it in such a way that you understand it. So make sure you go back and watch it. Yeah. So from last Friday, we started with support and resistance, and then we look at the types of support and resistance that we have. And then we made mention that we have two types of support and resistance. The first one to be the static support and resistance, and the second one to be the dynamic support and resistance, where we gave examples for each of them. We say that we have for the static support and resistance, we can look at the trend lines and we can look at the ranging markets using the rectangles to draw support and resistance. And then finally, I say that we also have psychological levels. Yeah, so we did the trend lines and the ranging one. So it's left with the psychological levels. And then for the dynamic support and resistance too, we said we can have the moving average, and then we can also have the Fibonacci and the rest. But for the scope of this video, I'm going to explain to you what psychological levels are, and then I'll give you a simple strategy that I was using previously. I stopped using it because I wanted to do price action properly. I did not want just some indicator to be dictating for me when to get in and out of the market. So that was the more reason why I wanted to take charge of my own decisions. That was the more reason why I stopped using it. But this strategy works perfectly. So after watching this video, I want you to go back and back test it and find out whether it is working or not before you jump in. Please I don't want you to start trading live right now. Make sure you back test it first and see whether it is working or not. So let's get into today's video. Yeah, so the first thing we are looking at is the psychological levels. When you say psychological levels are just round up numbers. And then these psychological levels or these price points, these key levels, they work because of the fundamental human dispositions. We as human, we value simplicity and order. Like our mind are very inclined to simple things. So psychological numbers are not some magic numbers. It's like you are just rounding numbers. Let's take for instance, if you go to the market and then let's say somebody gives you a price, like you are buying something and somebody says that the thing is 22 cedis. The first thing that will come into your mind, if you want the person to subsidize the price, the first thing that will come into your mind is 20 cedis usually. So that's how psychological levels work. So these psychological levels are price points in financial markets that hold significant meaning for traders and investors, mainly due to their simplicity and ease of remembrance. Yeah, so that's the definition, that's the basic definition for psychological levels. And then these psychological levels, they are round up numbers ending in zeros or halfways 50s. So you always see that these psychological levels, they end in zeros and 50. I'll show you in a bit how to draw these levels on your chart. Yeah. So when price gets to these psychological levels, investors, market participants look at these price levels because they are very, very important to them. So let me show you how you can draw your psychological levels. So this is how you are going to draw a psychological. It works on all pairs. These are not the only pairs they work on. But for the scope of the video, let me try and you can do the psychological levels on any. You can do them on any chart or any pair, right? Or on any time frame. But usually, for simplicity, I usually start making my psychological levels on a 4-hour time frame. Yeah, but you can do it on any time frame that you want. So when you are drawing psychological levels, the first thing you want to look at is where the current price action is. Looking at this one, the current price action is at 1.28519. So it's like I told you that the psychological levels, they end in fives and zeros. So in order for this one to actually be relevant to the current price action and where price is currently at, your next psychological levels will be 1.285. 1.285. So just follow this video and listen and pay attention. Just know how to draw the psychological level. So what you do is that you select this horizontal line. You select the horizontal line. Now I have it on my screen here, so I'll just select it like this. You look at where the current price action is. The current price action is 1.28519. So what you do is that you place this horizontal line here, but when you place it here, it is going to snap to a different place. So in order to make it correct, or in order to get the right psychological level, what you have to do is you have to come to this setting here. When you come to the setting, just delete everything and make it 1.285, so that you get a perfect number here. So we have 1.285. The next psychological level will be 1.280. 1.280. But when you place it here, you have to go to the setting and then enter it properly. 1.280. So in order for you to know whether your psychological level is right or wrong, what you have to do is that you can use this measure tool. You can use this measure tool to measure from one psychological level to another psychological level. If it is up to 50, it means it is correct. If it is more or below 50, it means your psychological level is not done properly. So they are just round up numbers, as simple as that. We are just rounding up those numbers. So the next psychological level will be 1.275. 1.275 if you are moving down. The next psychological level will be 1.275. So you press the horizontal bar, then you come to setting, and then you enter 1.275. The next psychological level will be 1.270. So you see that I'm just rounding up the numbers. So you can draw with the psychological levels, you can draw as many as you want, but make sure they are relevant to the current price action or where price could potentially move to. Looking at this point, it's not necessary for you to draw up to all the way down here, because the price is not going to get to these places any moment from now. Yeah, so let's do some more psychological levels. An area of psychological level can also be 1.29 if I'm going up. 1.29, 1.29, yeah, exactly. 1.29. So 1.29, you just delete everything and make it 1.29. You measure, if you want to know whether it is correct or wrong, you measure from one psychological level to another psychological level. Looking at this is exactly 50. Then you know that, right, you are correct. The next psychological level will be 1.295. 1.295. 1.295. And then you leave it here like this. So you can draw as many as you want. The next one will be 1.30. 1.30. So it's not like I'm doing anything. I'm just rounding up the numbers. 1.30. Right, so let's see how the psychological level. Let me add some more. Let me add some more to it. This one will be 1.265. I'm not doing anything. I'm just rounding up the numbers. 1.265. 1.265. They work on all pairs. Then let me add the last one. The last one will be 1.260. 1.26. Yeah, so that's it. So let's look at how these psychological levels. Let's see how price react of these levels perfectly. Let's use a 15 minutes time frame. Yeah, so these are the psychological levels. Oh, come on. 1.285. 285. Yes. So let's see how price react of these numbers. See, from this point to this point, the price was coming. When it touches the psychological level, it started while moving down. Even at this point, when the price got here, there was a little reaction. Yeah, let's look at this one. This is a psychological level. See how price reacted of it when it got closer to it. So let's look at some more examples. See how price react of, see, the price was moving down at this point. When it got to the psychological levels, it started moving up. When the price got to the psychological level, it was misbehaving. This is also a point of psychological level. See how price is reacting of them from one psychological level. This one was actually validated, but let's look at this one. So the point I'm trying to make is that you cannot just trade only the psychological levels. See how price react of this psychological level. Exactly when the price touches the psychological level, it started moving down. See, this one was not respected. This one, see this one was also what respected exactly when price touches it. So this is how I get my sniper entries. I don't just trade the psychological levels. I couple it with some other things like other blocks or the support and resistance that I taught you earlier. So you can just be combining some of these things in order to make those informed decisions. So let me show you how I entered the chat or the trade that I sent in a group previously. Let me show you the reason why I got more confident taking that trade. So first, using your trend line, there was a reaction at this point. First touch, second touch. I connected the dots and then I extended it into the future. So when the price got to this place, there was a trend line at this place. Same time, there was also what a psychological level at this place. So that was the more reason why I entered this trade, because I saw trend line touches and then also a psychological level at this point. That was the more reason why I entered this trade. And see, price when the price go to the next psychological level 1.290, it started while moving down. So what you can use these psychological levels to do is you can use it as your entry point. Let's say if you have a trend line touches and all that, you can use it as an entry point. And then once again, you can also use the psychological levels to take profit or take partials. From this point to this point, maybe you may see it as very small, but from this point to this point is 60 pips. I think it was 60 pips here. 60 pips. Guys, if you are using one standard lot size on 60 pips, for every one pip it says $110. So maybe for now you will not be making a lot of money, but in the future, as you keep on progressing, your portfolio will increase and then you'll be getting a lot of money. So please, let's keep it very simple. So that's it all about psychological level. Let's look at the next pair. Let's look at gold, how we can also draw gold. So always I start from the 4-hour time frame. So the psychological level on gold will be looking at this current price action. Looking at the current price action, price is currently at 1961. So when you are to round 1961 to the next whole number, it will be what? 1960. So you just snap your horizontal bar here, go to setting, and then delete everything to what? 1960. And then okay. So you just be adding them. 1960, the next one will be 1970. The next one will be 1970. 1970, 1980, so you can do as many as you want on any pair. So after this video, if you want me to show you how to draw the psychological level on other pairs, you can just let me know and then I'll do that for you. But it is very simple. You can just try doing it on any pair. They work like magic. That's how I get my snapper entries. 1950. Yeah, so for the sake of time, I'm not going to do a lot of them on gold, but you can just be trying them out and see how price react of these levels. The next one will be 1930, 1930, and then that, and then it keeps on going. So let's look at on the 15 minutes how the price reacts of these psychological levels. I didn't draw a lot of them. If I had drawn a lot of them, you'd have seen that the price works well on them. So see, when the price got to the psychological level, it was just misbehaving and it started moving down. See how price react of these psychological levels. Yeah, so that's how it works. When the price got there was a reaction. So just like I'm saying that you cannot just trade the psychological levels alone. Make sure you couple them with your trend lines or any technical tool that you are using. I've seen the price react of them very well, but I did not do a lot of examples. See, the price was moving down. When it gets here, bang, it started moving, it started dropping down. So that's how I get my sniper entries. Yeah, so that's it for the psychological levels. The next technical tool or the next support and resistance that I want to also talk about is the moving averages. So the next technical tool that I want us to look at is the moving average and how the moving average. So the moving average will be an example of the dynamic support and resistance. So these are the moving average to the work. Now I sent the setting into the group. You can do it on your phone, you can do it on your PC. But this is how to set it up. First of all, you have to click on Control plus N for this navigation bar to happen. When it happens like this, you come to trend and then you select your moving average. The moving average, make sure that the period is at the period 40, shift 0, MA method is simple, apply to close, and then you can choose whichever color that you are using. But for the scope of this video, I was using the blue color. And then you just press your OK. The next thing you want to also look at is you come to oscillators. In the oscillators, you select MACD. MACD, the parameters 12, 26, and 9, apply to close. The colors, you can use the blue and the red color to indicate it. So just like I have it here. So in order for this strategy to actually work, you need just two things to happen in order to place either a buy or a sell. It is very, 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 very simple. So I don't want you to overcomplicate it, or I don't want you to overthink it. So in order to draw, in order for you to make a decision based on this indicator, you need two conditions to meet. The first thing is that you need a moving average cross, and then secondly, you need to see the MACD cross too. So let's look at in a buying situation. Let's say if I was looking at this chart, you see that this chart crossed the chart above. When I say above, it means that it's crossed above it like this. It's crossed above it like this. It's crossed the chart or these graphs, the candles that you are seeing over here. It's crossed above it like this, right? So when it's crossed above it like this and the candles are beneath it, then you start looking for selling opportunities. But in order to confirm it, once you see the crossover, the next thing you want to also look at is the MACD. If it crosses above it like this and the MACD level is below the zero level, this is the zero level. From this place, the zero level, and then you have the positive side and you have the negative side. So when you are looking for selling opportunities, you want to make sure that the MACD level is below the zero level. So at this point, there was a crossover. At this point. When there's a crossover at this point like this, the next thing you want to also do is come and check this MACD level. Is the MACD level below the zero level? If it's below the zero level, you can place a sell order and then you put your stop loss on top of the moving average. Now you don't have to make it so tight that the price sometimes will just come and take you out and continue moving. Just give it some space to rest. So you can put your stop loss around this place and then you sell. See how the price dropped because the two conditions met. Once again, at this place, the chart crossed below it like this. See how it crossed below it. And then the MACD level at this point was above the zero level, so you can place a buy for this position. You see that at this place you'll be taking a loss. Yeah, but no strategy works 100%. You are going to take some losses at some point in time. Yeah, so once there's another cross like this, let's say maybe you took a loss at this point for the buy. Once you see another cross like this, what you can also start anticipating that the price is going to sell. So you come and look at the MACD level. At this point, the MACD level was also below the zero level. So you place a sell order and put your stop loss around, maybe somewhere around this place. And you see that the price was what? Dropping. So the next thing that, because I told you when you see a cross below or above, let's say you were in this trade, when you see another cross over like this, it means that the price is what? Potentially going to move up. So what you start doing is that you close the selling trade, and now you look for what? Buying opportunities. But let's look at this current price action on gold. you see that even though there's a cross below the chart, which is what an indication of a buy, it's an indication of a buy, but let's see the MACD level. The MACD level is still below the zero level, so it means that even though we can start anticipating for a buy, but we need to wait for the MACD level to be above the zero level in order to start looking for the buying opportunities. Let's look at this one. The chart crossed below it like this, crossed below this place. The MACD level, let's see the MACD level. The MACD level is above the zero level. See, the MACD level is above the zero level, and then there's a crossover like this. There's a cross below it like this. So you start what? Buying. So you buy at this point. You put your stop loss somewhere around this place. You give it enough space to rest. You put your stop loss around this place, and then you ride. You see how price moved massively. So if I was in this trade, I'll be closing the position at this point. Once there's another cross like this, to start anticipating for selling opportunities. Yeah, so that's how it works. As simple as that. It works on every pay. It works on all time frame. The nature of trader you want to become will determine the time frame that you are going to use. So you can use it on the 5 minutes time frame, 30 minutes time frame, 4 hour time frame, 1 minute time frame. Yeah. So the higher the time frame, the more vim you have. I'm saying vim. The more you can be relaxed and trade it. So me, basically, I was just using it on the 15 minutes time frame when I was using the strategy. Yeah. So as you can see, this is very simple. So make sure. So just like you can see here, this strategy works very well. So let's see the GBP/USD2. The GBP/USD2 15 minutes time frame. See that there is a cross above the chart like this. The cross above the chart like this, where the candles are beneath the moving average. And when you check the MACD2, the MACD level is also below the zero level. So you can start anticipating for selling opportunities. So guys, this strategy works very well, but you still need to couple this strategy with good risk management and a sound trading mindset. Yeah, if you're able to do that, there's no way you are going to fail with this strategy. It works very well. It works on all pairs. It works in every market, stocks. It works in synthetic indices, every pair that you can think about. And so make sure you make good. So at this point, I'll be looking for buying opportunities because see, there's a cross below it. The MACD level is also above what? The zero level. So you start looking for buying opportunities. And remind you, I told you that your stop loss has to be what? Above the stop loss has to be above the moving average. And you have to make sure that as you make profits, you have to be taking partials. You have to be very objective. So once you see another crossover like this, so if I was in this trade, once I see a crossover like this, it means that I should start anticipating for buying opportunities. So what you have to do is close your buying position and start looking for selling position and start looking for the buys. So that's how this strategy works. As simple as that. So this trade that I took, or the signal I took, what gave me some more confluence? So there are things like they work hand in hand. What gave me some more confluence is after sending the chart on the 15 minutes time frame. So what gave me some more confidence on the trade I sent into the group? This is what gave me some more confidence. Now the first thing is that there was a trend line touch here, there was a psychological level here. And then when I check the moving average too, you see that there was what? Clearly a cross. There was a cross below the chart like this. And then this is good. This was what happened. See that there was a cross below it like this, and then the moving average was also above the zero level. So that was what gave me some more confidence to buy for that trade. And then what happened? The price started moving up. So moving average, the MACD, the trend line, and the psychological levels. So when you are trading, you have to be looking at high probability setups. The more confidence you have, the higher the probability. But I need to keep your trading very simple. So right now, looking at this current chart, you see that the price at what? Cross below it like this, and then the MACD level is also at the 0 level. So you can start what? Buying for this pair, which is the GBP. When you buy, you have to put your stop loss below the blue moving average. Put it below it and then give it some space to breathe. Yeah, so that's it. So thank you for watching this video, and then I hope to see you in next Friday's class. So for the assignment, I actually gave them an assignment. So the assignment, the first assignment is I need you to draw your areas of support and resistance using the trend lines and the normal ranging market. Draw your trend lines. So this is how you are going to go about it. You select any pair of your choice, any pair that you want to do, and then you identify the swing points. We talk about the swing points in the video. And then you connect them for the trend lines, for the support and resistance, to look for places where the price had initially reacted to, and then you connect those points and expect either a bounce or a breakout when the price gets there. So that's the first assignment. Draw areas of support and resistance. The second assignment is that we are going to backtest this strategy that I taught you. Backtest it and find out whether it is working or not. You can test it also on a demo account, but I don't recommend you to trade live with this one. Yeah, and this one, it works very well on synthetic indices, boom and crash. I don't know if some of you know boom and crash, and then the volatility and then the rest. It works very well on them. Yeah, so that's basically it. So yeah, so thank you for watching this video, and I hope to see you next week in next week's class.